Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tsapo Modiba, and thanks for joining me. Tonight, I'm joined by Ayalanesh Tafese, country risk analyst at Rand Merchant Bank, for a closer look at Nigeria and the local currency. Our favorite topic, Nigeria.
Yeah.
Well, it's easy to talk about. A big development in terms of the budget approval. Your take on the overall budget?
So finally approved. I mean,
Finally.
Buhari did present it in December, and I think everybody was waiting for it.
So 3 months later, almost 4 months later.
Yeah. So at least it's gone through the parliamentary process now.
Yeah.
What is interesting is on their revenue assumptions, they're assuming that they're budgeting on a $38 oil price.
Right.
Meaning that the majority of their funding now they're looking for is coming from non-oil sources.
Okay.
One would think that if you're trying to increase the tax amount that you're getting, that you would increase your tax rate. They haven't done that. So I think the big focus for Nigerian authorities this year will be on plugging leakages, making sure that tax efficiency, the way that they collect the tax and that sort of thing happens and is improved as soon as possible.
So eliminate corruption.
Eliminate corruption, eliminate mistakes and wastages, stuff that's not going to the right places.
And how likely is that?
That is going to be a very long process. I applaud their efforts to do so. I think it'll really give them a long-term benefit. But I think thinking that you're going to achieve this in a couple of months, I think is quite optimistic.
Right.
So I think it's going to take time. They have started, but this really is a very long-term play that they're
So what does that mean from a budget shortfall perspective? Is there a big potential here that there will be a shortfall?
There is a big shortfall, especially when you consider that this budget actually envisions that their capital expenditure, they've increased it threefold.
Yeah.
Again, the efforts are commendable. I think for a long time, Nigeria has been underinvesting in infrastructure.
Right.
So the fact that the government is looking to do this is positive, but that means less revenue, bigger expenses. You're going to have quite a big deficit that you need to fill.
Right.
So they are currently in talks with the likes of the World Bank, the African Development Bank, for development funding for these projects. But these negotiations are going to take time. To come through, maybe third quarter of this year, if they do get those funds to get these going.
So if by some miracle they implement this budget as it currently stands, it probably bodes well for the long-term prospects of Nigeria.
Absolutely. I think that's the key thing. I was in the country recently, and what investors are saying is this anti-corruption drive, cleaning up public finances, is a really great long-term play.
Right.
These investment in capital expenditure, infrastructure, again, great for the long term. But I think what investors are missing is how are we going to get to this long term? This
Right.
short to medium term policy, how do we fix the issues with the currency and that sort of thing, to investors hasn't been addressed properly as yet. So that's the disconnect.
Right. You mentioned it, the magic C word, currency.
Yeah.
Currently pegged around the 200 level. Your take of whether that's realistic or not?
Look, I mean, if you look at the parallel market, today it's sitting at 320 to the dollar.
Wow.
That is a huge gap from the official 197 that the government
Right.
has up there.
So the market's essentially saying we don't believe you.
Yeah, the market has clearly come out, and I mean the likes of the IMF have even come out and said that the currency markets are not balanced and we need to rebalance them. I guess the big question on everyone's mind then is, if the market doesn't believe that this is the true value of the currency, why haven't we devalued yet?
Right.
Is the big question on everyone's mind. I was in the country, as I said recently, and there seems to be sort of an ideological difference.
Right.
You have one side of government that's saying, if I devalue, we are an import-dependent country, I'm hurting the man on the street, I'm going to have to hike fuel prices, food prices, so I don't want to hurt the average Nigerian.
Right.
You get another part of government that's saying that a lot of importers are already having to source their money from the parallel market. They're paying 320 in the parallel market, and that cost is being passed on to the consumer.
Anyway.
So the average Nigerian is already hurting. So we need to try and devalue the currency in order to make the markets happy. So they're in a catch-22,
Right.
and I think what both these arguments point out is the fact that simply devaluing the currency alone is not going to be enough. You need to come up with a range of policies that you're going to have to institute, not just focused on devaluing, but focused on how do we maximize the dollar inflows into the country, and how do we then efficiently allocate those dollars.
Does a weaker naira potentially assist oil and gas, as an example, to be more competitive in global senses?
So unfortunately what happens in country for Nigerians is they do have oil, but they don't refine it in country.
Right.
So they are having to pay global prices for what they use. And unfortunately, the price of the specific type of oil which Nigeria produces, which is Bonny Light,
Yep.
is actually trading just a little under the price of Brent crude right now.
Right.
So, I mean, from a price perspective, it has really hurt. If I was the finance minister of Nigeria and I have dollar earnings from my oil sales, it will benefit me for the currency to be devalued. And again, that falls into the ideological differences that they're having.
Right, and you touched a little bit on it in terms of importers already passing through a weaker currency. What's been the impact of the peg across industries?
So if you are an import-dependent industry, you are going to have a tough time sourcing the hard currency in order to import from. So either you decide not to import those specific goods anymore, or you look to the local market to source them. So import-dependent industries are really hurting. I think we've already seen the likes of the manufacturing industry going into a bit of a recession last year.
Right.
But if you are a supplier in the local market who are able to supply these import-dependent industries, there is a potential opportunity for you.
Right.
But I think the key thing here is the timing of it all. I don't think there's been sufficient time given. This oil drop happened so suddenly in order for me as an import-dependent industry to find the right suppliers in country. And if I'm a supplier, if they do exist,
right.
And if I'm a supplier in country, there's pressure on me to suddenly increase my production capacity all of a sudden.
Right.
And they haven't been given the time to be able to do that. So I think there are going to be teething problems as they try and balance these two going forward.
I guess it highlights part of the issues with very volatile currencies. If it's a structural weakness going forward, then it allows industries to actually roll out naturally.
Yeah, definitely. But I mean, as you say, the structural issues, I think, if I am a manufacturer and I want to increase scale, now comes the issue of, is there enough electricity supply to help me to do so? Do I have the right funding to be able to do so? So, I kind of see the current economic issues that Nigeria is going through as both a blessing and a curse. Right. A blessing in the sense that you're now forced to have your house in order, you are forced to clean up the corruption, you're forced to address these structural issues. So I think for the long term, if they're able to do it, it might not be the terrible situation that it currently seems.
And probably also forced to look elsewhere other than oil.
Absolutely, which is important. What's really interesting is, as a percentage of GDP, oil is only around 10%.
Right.
It's really not that big. The concern is the fact that it makes up about between 70 to 90% of your exports and government earnings. And I think that's where the diversification drive needs to take place.
Now, let's put on a positive hat and assume that the budget is implemented, fairly closely to what's currently presented. What are the industries that should actually benefit from this in the medium to long term?
So if you are a producer that was looking inwards anyway, and your raw materials are sourced from in-country,
right,
I think this is a really good time for you.
Even the currency helps you.
Even the currency helps you.
Right.
Another thing that I would look at is the construction industry. If they're able to pull off this huge capital expenditure, which is much bigger than we've seen before in any sort of government budget, there will be a lot of building happening. So if you're in the construction industry.
So even cement, i.e. Dangote cement.
Yeah, the big names.
The big names will do well, okay?
Yeah, so there'll be opportunity for you there, and any sort of supporting sector around that, services sector and that kind of thing, which can tailor themselves.
Right, okay. The current, currency issues, how are those really affecting the banking sector in Nigeria?
I think we've seen a few banks come out and say that they're posting a few losses. If you had made quite big loans to industries dependent on oil and gas, unfortunately those industries are coming under pressure. So if you have made loans to them, you will have to restructure those loans in the current oil environment. Look after that. And I think also the fact that the hard currency availability issue, as I say, it has hurt things like manufacturers and that sort of thing. So those industries are under pressure. And again, if you as a bank are playing in those industries, you will face a bit of pressure there. So we are picking up pressure points across the economy.
Right.
And depending, I guess, on the structure of the balance sheet of that specific bank, they're going to have come up with strategies to deal with that.
All right. Now, throwing all of those things into a pot and assessing Nigeria from a risk perspective, where are we? Where do we currently sit?
So if we look at, for example, from a credit risk perspective, Standard & Poor's came out about a week ago and said they're putting Nigeria on a negative outlook.
Right.
I think that is after they downgraded them a year before. So I think the fact that we're not getting, as I mentioned, this medium-term to short-term policy about what do we do in the interim has really put a dampener on sort of the medium-term view of the country. But long-term, I think investors are still quite positive on the country. There's a lot of potentials to be unlocked. And if they're able to implement these long-term policies that they have and they're able to stick to it, I think there's still plenty of opportunity. It is now, Africa's biggest economy. They are going through a hard time.
And a huge population.
And a huge population.
What does that mean in terms of, I guess, the short-term outlook for Nigeria? Is it quite uncertain then from a growth perspective?
What is really interesting is a lot of the businesses and companies that I spoke to when I was there said they're not even particularly worried about getting the currency to a certain level. What they actually would prefer is policy certainty.
Right.
They want the government to come out and say, we want to do X, Y, and Z. These are the policies that we're going to institute, and businesses can then tailor their strategies to match that. Unfortunately, again, because of these ideological differences, and the fact that the government has to come out with a broad range of policies means it's going to take them a while to formulate that policy. And once they do, it needs to be communicated very clearly. Unfortunately, what we see now is the communication has not been that great. You tend to find rumors that abound in the business community to say they'll devalue this week, they'll devalue this week, and you'll see the currency in the parallel market, all kinds of volatility happening.
Sure.
In the space of a week, we went from between 300 to 400.
Wow.
It jumped that much, trading
Wow.
to the dollar in the space of a week as a result of rumors. So I think the key thing is about communication of government policies. It's policy certainty that they're looking for.
Perfect. Let's leave it there. Thanks to my guest, Ayalanesh Tafese, Country Risk Analyst at Rand Merchant Bank. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Mudiba_Tsepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.